everyone. For those of you who is listening, hopefully my sound audio is coming to you nice, loud, and clear. We are at our Friday closing bell for the week ending 5th of July. It has been an amazing 6 months, especially more from outside. Our portfolio has, beaten the KLCI. Despite the pullback that we've seen on the consumer stock, it has performed well, partly due to the dividend paying. So we've been advocating the dividend policies and the dividend strategy. Now, to know more about what we like to be selecting, hope all of you could come on the month end market outlook that we're doing on the 27th of July. So do remember that there is an early bird fee, which is a 99 ringgit to pay for, which is to us a small fee just to pay for our costs for hosting it at the UM convention. And I hope to see all of you. Hope to see all of you able to come. For those of you who's from outstation, take an effort to come down at least once or twice a year. Give us a chance, myself, Bill, plus the other speakers, to meet you and to really try to understand your aspiration, to be an educated investor. How's that? Yeah. Okay. Now let's go on and start with our thing. Well, market was up today. As I said before, this is getting interesting. The week before we were talking. Now last week, looking back my notes last week, we said there's a window dressing which end on the 28th of June. So this week, which is beginning of first week of July, we will see the potential profit taking and moving sideways. Just reading here from my notes that if it can close above 1785, it is still possible, but the window dressing and it will be tapering off as we're hitting the resistance. However, we did mention that the regional market, in this case the Singapore market, we will see a rebound, and we did see a rebound in here. Now, pay notice to this high here, which is what? 1778, and this high is 1782. So what is basically telepathing is that the market couldn't take out the old high in here. Now, what's going to be very important, if you look from a weekly standpoint, the next 2 weeks, which is the mid-June, mid-July, and the end of July week, it market has to break to the 1790. If it can't, look to short the market in the short term in here, like what we did for this market in here, because it's still telling you there's no conviction. For some reason why I don't, you can notice this thing here. Maybe let me just show you 4-hour bar chart here. Let me get the 4-hour bar chart. I should have it here. Okay, daily, yes, a 4-hour bar chart, right, on the daily. Okay, it's coming up. And you will see again, there's always a spike towards the end of the day. That we were seeing weakness coming in. Higher prices are rejected. Market is going back down in here. Another point to take note is also foreign funds are been selling a fair bit. Not a lot. I will show you the funds coming in. They are selling it, but they are definitely not a lot coming in. So you can see this is a very narrow spread on very low volume. So that's a possibility of a no demand. Okay, so we'll just make a note in here is a possibility for no demand bar on Friday, which is a sign of weakness. Okay, so but if you look from a weekly standpoint, that seems to tell you a different picture. Okay, going forward, let me just clear the cage here. Okay, and refresh this again. I still believe yeah, still have the same problem with this volume here. So you can see this is a nice spring in here. Typically spring, we will see the next few bar, it will edge a bit higher. Now pay notice if the bar low of next week bar touches or retest back to 1762. Pretty easy to trade from here onwards. We are looking for a sideways market with a breakout on the possibility side, or retest back to 1750. Like it or not, I'm still on the assumption that the 1750 level, which is the 3 to 4% level, has been booked by the local institutional. how to put it in words is that they are telling their client, look, the market worst case this year will close at least at 1750. We will do whatever we can to hold up this market at 1750. So to guarantee at least a 4 to a 5% yield, or in terms of a price gain to their clients. So that's what we are holding above the 1750, because that is what we call the post general election trade-off that which actually happened. So that's why this market is still holding above the 1750. Anytime breakdown, that tells you the fundamental of the country, in this case nation economy, has changed a lot. Now bear in mind the Bank Negara has still as well as the politicians from the Prime Minister Department are still reinstating that the GDP growth for this year is still at between 5 to 6%, although the World Bank has revised to 5.1%. So that's why we have to hold above the 1750. Unless we revise it down to 4% of the GDP growth, then we might see a breakdown to a 1700 level in here. Okay. So that's in short. Now looking at the broader market, FBM 70 in here, you could see also, although we don't have volume in here, market is like, testing whether it is, uh, sign of strength. It all depends whether you take up this high here. So it could go here and break higher, right? Or it could go a bit on a break lower. At this junction, it's pretty much, a sideway market going forward. So we have to see what's happening next week. Now, like all in all, the economy in US is still recovering, and we are seeing news that is coming up from the Eurozone, especially Portugal, that the rates spike, and that's a possibility.